So, Mark Cuban has given up his share, his equity majority stake in the Dallas Mavericks. Now, this story has been covered all across mainstream media from different angles, but there's one element to this story that's not being talked about.
So tell us, what do we know about Cuban's deal here with these prospective buyers, and how much of a surprise was this?
Well, it's really surprising. Probably one of the more shocking NBA transactions of the last few years, and the details are still emerging. But I think what we can kind of whittle it down to at this point is that Mark Cuban is selling a majority stake of the Mavericks to the Adelson family for somewhere around $3.5 billion, which is a lot of money, but also is not as much, probably by valuation, as the Mavericks might be worth. And certainly one of the few teams, a few NBA teams in the last few years in which the valuations haven't continued to go up. And the interesting part of the deal is that, as of the reporting so far, it seems like Mark Cuban will retain control of basketball operations, but it won't be his team anymore.
So, Mark Cuban sold the Mavericks for $3.5 billion with the B. So, I did some digging and found out he purchased the team. He acquired them in early 2000s for $285 million. Now, many people are sitting at 30,000 feet in the air talking about the type of investment he got. 285 million, now is up to 3.5 billion. Such increase, such a return on investment. But one thing that can be learned from this type of transaction is the tax effects of this type of treatment. Now, from a tax perspective, Uncle Sam is sitting in the back like, Mr. Cuban, I want my money. On the base level, what's happening is an individual, Mark Cuban, sold an asset, the NBA franchise. It's considered a capital gain treatment because he held it for longer than 1 year. Capital gains is related to any assets that you have held for over 1 year and sold it for more than what you acquired it for. So he purchased it for $285 million and sold it for $3.5 billion. There's a massive capital gain that's associated with this particular sale. Now, for the sake of understanding this further, let me show you better than I can tell you. I think visuals will help understand this point better. So this right here is a capital gains calculator. It essentially can help you estimate what your capital gain tax will be if you were to sell some assets. So what we know so far about this particular sale, he purchased it for $285 million in early 2000s. But he sold it for $3.5 billion. So his pre-tax capital gain is $3.2 billion. So that means this is what the tax rate is going to be applied on. To understand which bracket you fall in from a tax perspective, it's based on your income. Well, I don't know Mark Cuban like that. It isn't like I got him on speed dial. Yo, Mark, how much you made last year? No, but I can guess he's likely in the top bracket. So let's just say he makes over 1 million. And I believe he's married. There's different thresholds for income if you're married, if you're single, if you're married filing separately, if you're head of the household, to figure out which tax rate that you should be taxed on. However, his income is so high that wouldn't even be a thing. So his estimated capital gains tax on the sale of his shares in the Dallas Mavericks is $643 million. 643. Now, there was all types of speculation regarding why he may have sold. It's something relating to Texas and gambling and casinos, as related to maybe he want to spend more time with his family. Regardless of what angle you want to attack this from, there's no way he volunteers his hand and says, oh, I want to pay $643 million in taxes to the IRS. Now, I don't know his full financial position. There could be other investments, other losses that he has incurred that can help offset some of the gains from the sale. This simple calculation for capital gains can be applied to anyone who's selling off an asset that you held for over 1 year. So while we're talking about, large numbers, NBA franchises, valuation that's over multiple billions of dollars, this type of calculation can be applied to you, to me, to anyone who's selling off capital assets. Now, if you understand how the top 1%, how the uber wealthy operate, their whole goal is like a game, is to acquire more assets. The fact that he's selling off this significant portion of the Mavericks, this isn't off the cuff. This is definitely a strategic play. Mark Cuban, in my opinion, is playing chess. There's something on the horizon that's coming that the public don't know. I read that maybe he could be strapped for cash. Maybe he needs the money. Now, this may be off because the fact that his tax bill will be over $643 million, I would reckon that he has different advisors and different people around him that can help him make the right decision. If you are in need of cash and you're someone who has a large portfolio, the way that most of the top 1% in the wealthy do it is that they leverage their portfolio to get credit. They will get a line of credit, they can get a personal loan, a business loan, but they use their portfolio as collateral, as leverage to help get that. So if you were to have, let's say, a $200 million portfolio, and you maybe need $50 million, if you were to walk into your bank, have a conversation with your banker, and use your $200 million investment portfolio as collateral for the $50 million loan or line of credit that you need, oh, you're going to get your money. You're going to get your money. It would not be in your best interest to sell off your assets, because when you sell, that is a taxable event. When you go get a line of credit, a personal loan or a business loan, that's considered debt. That's, I owe you money. There's no tax treatment. There's no tax effects for you going to go get a loan and go get into debt. So if he was really in need of cash, his best interest would have been use his billion plus net worth, his portfolio, and use some of that as collateral to get cash. There's a bigger play going on here. Mark Cuban is very strategic, business savvy, a guy known for being able to assess risks and pick the right people on Shark Tank to invest in. This is a strategic move, and there's no way this type of move was made without having the proper advisors. This is the CPA Mindset, helping you learn and think like a CPA. EFB.